Well, welcome everybody to this week's stock market review. My name is Bennett McDowell with traderscoach.com. Great to have you here. All right, so today is the 15th of May. We got a lot of economic announcements that came out today already. So we're going to go through those, and I got to go through a few administrational items as well. Now, also too, just a quick note, if you're interested in me actually looking up any stocks that you may have, or perhaps your broker recommended, don't forget we have Stock Analysis Friday for that. And that's every Friday at 8 a.m. Pacific time. And you can join us, and I'll be glad to look up stocks that you may be interested in, or you may be long in some stocks. And then, of course, want to know, where your exit should be and things like that. So keep that in mind, and that's right on our YouTube channel. All right, well, let's dive in today. A few administrational items first I want to cover, and then we'll go ahead and get into all the charts and so forth. All right, so first thing here, of course, that we need to talk about is, of course, give us a like, subscribe, and share for us. That helps to our YouTube calculation, so to speak. So apparently that helps a lot. I don't know if it really does, but that's what they tell us. All right, now on the disclaimer, all right, there are risks involved in trading. We want you to be aware of those risks. There's no guarantees in trading or investing in the financial markets. And of course, always trade with money you can afford to risk, called risk capital. We do really teach a lot about risk control. I've written a few good books on that. And you should also apply risk control in each and every trade. So you always should know what your trade risk is as well. And then finally, check with your financial advisor or whoever manages your money to be sure any of the concepts that we may suggest here are suitable for you. I think that's equally as important. All right, so a couple books here on money management. I've got my new book here, The Art of Trading, coming out this year. And that's going to be probably one of my best books I've ever written. It's going to be a pretty hefty book at almost 450 to 500 pages. And so I'm pretty excited about that. And again, that should be out by the end of the year. All right, so I want to get right into the economic reports. And I'm going to enlarge this screen here so you can see it better. And basically for today, on the far left-hand side, we had CPI out at 8:30. I'm going to go over the results of that. We had retail sales out, business inventories, housing market index, and the EIA petroleum status report. So the CPI, markets are all up right now. So the CPI was pretty well accepted today. Retail sales, okay, not quite as great. And then we go to Thursday, May 16th, tomorrow. We've got housing starts and permits, jobless claims. We've got Philadelphia Fed Manufacturing Index, import and export prices, industrial production, natural gas report, Fed balance sheet. I think it's going to be interesting to see jobless claims tomorrow and the housing starts. And then Friday, we end the week with just a few things, Baker Hughes rig count, which is every week, and the e-commerce retail sales. All right, also too, on today, we always have the NBA mortgage apps out as well. So definitely you can check those out. All right. So that kind of gives you the health of the mortgage industry. All right. I pulled this off here. I'm going to just enlarge this a little bit here so you can see it better. Now, this came out basically May 1st before the numbers came out today. And I just want to share this with you because basically the next meeting will be, of course, in June for that. All right. And so basically the experts at that time expected the Fed to hold rates steady with a target range still of around 5.25% to 5.5%. All right. And they're waiting for inflation to ease a bit more. Today was kind of not conclusive on whether that's happening, but it wasn't super bad. And the markets are kind of reacting positively to that, because it is lower, the inflation is lower with the numbers that came out today than they were previously. All right, and so basically, I took this basically yesterday, so that tomorrow is the April CPI, April retail sales, and so forth, and then jobless claims on Thursday coming out. So basically a big week in announcements for sure. U.S. mortgage rates right around the 7% for the 30-year and 6.38 for the 15-year. Okay, so that's kind of where we're at now. And of course, that can change week to week. All right. So this did come out today on the Wall Street Journal. U.S. inflation eased in April with a key measure of price pressures slowing to its lowest level since the spring of 2021. All right. So we've had a slight ease in April. They're going to wait and see a little bit more to see what happens over the next month or so. But this kind of at least solidifies they won't be raising rates, I don't think. But they could keep them steady for one more quarter, so to speak. So we'll see. Now, they're also building a case that they possibly could lower rates if this continues. So kind of things are a little bit up in the air right now. The Consumer Price Index, a gauge for goods and services costs across the U.S. economy, rose 3.4% in April from a year ago. So it's still above the 2%, all right? And it's still 3.4 above what it was last year. So we still got some problems with inflation. All right, so-called core prices that exclude volatile food and energy items climbed 3.6% annually. All right, the lowest, however, since April 2021. So, some people will view this as a stark improvement. Some people kind of like shy away from it. I think the Fed's going to wait and see what other information comes in as well. All right, and this is kind of an interesting graph on inflation over the last decade here. And as you can see here, we shot up in 2022. Of course, we have COVID and everything else, but it has come back down. And it's kind of, if you see here, a little bit meandering here. And it's still around, the ideal is what the Fed wants it to be is right here. So, I don't know exactly what they're going to do here with interest rates. I think June, they could hold them steady. But I don't think they're quite ready to lower them quite yet because we're still far away from that 2% number that they really are looking for before they get too excited that inflation is curtailed. So I think that graph does a pretty good job of putting it into perspective. All right, so I pulled this off briefing.com and basically talking about the CPI. So the total CPI increased 0.3% month over month in April versus the expected 0.4. So it was a little bit better than expected. Core CPI, which excludes food and energy, increased 0.3 month over month as expected. There are no revisions to the March readings, which showed total CPI up 0.4% and core CPI up 0.4%. All right, and then the other information here, the key takeaway, however, from the report, and I agree with this, is that there were no negative surprises. And of course, that I think is why the market is responding okay. They were kind of a little bit jittery on something to the downside. All right, the line on the consumer inflation is that it improved year over year, which is important if the Fed is ever going to walk the line to a rate cut. However, the disinflation in April is still only a baby step toward the Fed's 2% inflation target, which will leave the Fed stuck in a watch and wait mode. So basically, that watch and wait mode is keeping rates where they are, not cutting as expected. So we'll have to see what happens. Now, the April retail sales report suggested consumer spending on goods was stuck a bit too. Total sales were flat month over month in the April briefing.com consensus 0.4, following a downward revision of 0.6. Okay, so basically retail sales are not taking off, okay? So kind of interesting. And how autos are down too as well. All right, so the key takeaway from the report is that it reflects more disconcernment on part of the consumer with discretionary spending activity, which is consistent with a growing body of reports highlighting the weakening activity seen from low income and middle income consumers. So the bottom line here is that people are cutting back on their retail spending. You're going to see that especially, okay, in the restaurant business. All right, that's really one of the first places that people cut back on. And what's happening here is you've got the very wealthy, those fully invested in the stock market and in hard assets, making a fortune. And then you've got the working class really struggling because of the inflation, and their incomes have not gone up enough to really keep up with the inflation. So you've got this widening between the well-off and the middle class that seems to be increasing dramatically. So it depends on which bucket you fall into, and most people fall into the bucket of the working class, and you're hurting if you are, and that's why credit card debt so forth has gone up unexpectedly, or expectedly, I should say. All right, just a quick note. We're going to look at charts. You're going to see software that we created. You can learn more about it on our website, but that software is going to be on the charts we look at. And the first chart I'm going to show you is the Dow Jones Industrial Average. All right, so we have this little profit-taking wave here, okay? And we're going to look and see, basically, did it come down far enough yet to hit our target? Well, it certainly seems like now we're moving back up and going to take this high out. So I would anticipate, we reaching this wave 5 target zone probably sooner at this point than if this went into a more longer profit-taking correction. So we're kind of inching our way up there. We're going to look at the live charts. This chart was drawn, and I put all the information on this on Sunday. So we've even gone up now more since this period. And then, of course, on the 60-minute chart, I have highlighted the profit-taking pullback zone, and we hit it, okay, with a possible A, B, C there with C wave, for those Elliott Wave people, being longer than A wave, or at least as long. And so therefore you have an ABC configuration that is actually fairly clear. And now we're moving up again with a bullish PTF. So we're kind of, heading on up in there. And the target zone for this one is around 41,000 to 43 if we can break this high. So that's kind of where we're at right now. We're going to take a look at the markets, live markets, like I said, in just a moment. All right, S&P, similar situation here. Again, targets are pretty high up on the S&P still to be achieved. 5652 to 6988 is our high probability target area. I'll just draw in a box here so you can see what we're talking about here. And in this case here, there seems to be no reason not to reach it. Okay. Some people are predicting a major sell-off this month. I don't see that. I've said that now for months. I do see a major sell-off towards the end of the year, maybe around, anywhere from the fall to the winter of 2025. I could see a top reached in that area there. And then the market will, of course, change trend dramatically, and we will go into a bear market at that time. But like I've said all along, I don't think that's coming quite yet. And we're still, of course, moving up. And so far, that seems to be exactly what's happening. All right, NASDAQ, similar situation. We have not hit the upper targets that we had forecasted here. All right, and even here. So we got some more legs to go up there. Now, that doesn't mean it's going to go straight up into that target area, but it should eventually wiggle its way up through pullbacks and surges and pullbacks and surges, which is the way the market works. All right, so keep that in mind. Also, too, Bitcoin here was taking a dive. It seems to be coming up again today. We're going to take a look at the live Bitcoin chart. All right, we've hit a low probability area, but we have a red PTF, so I'm concerned and watching that a little bit. And then if we go to GBTC, which is the ETF equivalent of Bitcoin, similar situation. We pulled back a little, but there could certainly be one more big pullback ahead of us here. So we're going to take a look at the live charts on that. And that brings us to real estate here. And home prices so far are surging. This is from the National Association of Realtors. And basically, for 9 consecutive months, the median price of existing homes has increased on a year-over-year basis. And you can certainly see here, if we back it up, here's the current time period here in March, and basically up 5%. And then in February, we're up 6%. So it's come down a little bit here, but still dramatically pretty darn good there. All right, it started to go back to the upside really last summer in 2023. So yes, are we in a real estate bubble? I believe we are. but that bubble has not busted yet, which is kind of another thing I've been saying all along. Real estate's very local, so certain areas seem to be getting a little bit of a pullback, but I would not call it a bubble burst yet, regardless of what you may see on YouTube. All right, Case-Shiller index, all right, indicates this bubble is still here, and you can certainly see where prices are here compared to the CPI. So this is the CPI, which was just released today, and this was the Case-Shiller. All right, and basically Case-Shiller is the average price of residential real estate across the country. And you can certainly see since the 1970s, real estate has maintained a level above the CPI, which means it's a good investment or a good hedge. So not only a good place to live, but not a bad investment for most Americans. And a lot of Americans' wealth has been generated by their homes. Okay, and this kind of graph shows you why. At times when the Case-Shiller gets away from the CPI, like it did during the financial crisis here, and currently here, all right, we're in bubble territory. So I don't think you can deny that we are in a real estate bubble. And how long will the bubble last? Well, they can last quite some time. During the financial crisis, it lasted about 1.5 years before it busted. So who's to say exactly when it will break? But these bubbles usually do. And so it's a matter of when, not if. So keep that in mind in all your real estate endeavors. Let me go back really quick to this and enlarge this real quick so you can see this well. And again, this came back out in 2023 by RE Venture Consulting. Hopefully they'll update this summer. But back even 1 year ago, all right, the average home price versus the average income was so out of whack that you had a bubble there as well. This was the financial crisis, and now we're even worse now. All right, so this is the average income down here. So when you get real estate, okay, higher than what people can afford, that's a problem. All right, and so again, this is affecting a lot of people looking for homes, and the higher interest rates don't help as well. And at this particular point, when this graph was made back in 2023, in about the middle of the summer, home prices were 31% overvalued. Well, they've gone up another, 6%. All right. And I don't think income's gone up that much. And interest rates have remained steady. So we're probably pushing around almost 40% right now. So that's kind of dramatic. All right. Now, debt to income ratio. All right. And here's a situation where, again, the current housing bubble is even worse than the financial crisis housing bubble back in 2006 to 2007. Then, and it really didn't break significantly until 2008, 2009. That's how long these bubbles can last. But basically, we're in a situation where if you throw in the debt of everybody out there, you have a problem even more with affordability on real estate. And that carries over, of course, to credit card debt too. And this was back in the last quarter of 2023, and it's even worse now. All right, you can see how it skyrocketed, all right, in 2021. And part of that is, of course, thanks to COVID, but also part of that is people basically, especially a lot of businesses have to borrow more money to stay afloat, and that trickles down to the consumer as well. Throw in their inflation, and you've got a problem. All right. There's some reports out there that are saying, a lot of people are basically financing just the basics of food and so forth all on their credit cards these days, which usually will not end well. So keep that in mind. All right. Now, the bright part of real estate a little bit here is the inventory is starting to increase as we go into this year. And you can see that here. So maybe, we reached a bottom on that situation for now. And maybe here we'll start to head up a little bit and get some actual sales. Transactions are still extremely low overall, simply because house prices remain out of reach for so many people. All right. And this is kind of an interesting little display on real estate indicating what the average payment is as of April 21st this year compared to what it was back in 2021. So this line here is the 2021 line, and this one is the 2024, okay, up here. So as you can see, with the higher interest rates today, the payment now is $28.43, which is roughly around 7.1% on your mortgage. And yet back in 2021, it was right around $1,600. So quite a bit more money in order to afford the same priced home back in 2021, so to speak. And then you throw in the fact that housing has gone up, and the average house now is at $415,925, whereas back in 2021, same period, it was below $350,000. So you had interest rates going up and house prices going up, which is kind of the double whammy for consumers trying to buy homes, and then incomes have not gone up that much. So there you have it. So keep that in mind as well. All right. So the next thing I want to do here is just drop down here, take a look at where we are currently in the market, and then take a look at some key markets as well. All right. So on this chart here, I'm just going to really enlarge this a minute. This is the Dow Jones Industrial Average Index, okay? And this red line is the old high back in March. And here is our move down and our move now back to the upside. So we are extremely close, all right, of taking out this old high. And the exact number on this old high back in March was 39,889, okay, 889. And here we are sitting at 39,748 and some change. So we're close. I don't necessarily, we have to break it. We could get a little resistance and a pullback again. So we'll keep an eye on that. But we're getting awfully close. So if we break that, then we're about to enter our first tier of the Wave 5 target zone, which is right here. Okay. So that's this area right here. And so if we hit this area, then we are in the zone for a significant top. And so that's kind of what we want to see and see when that happens. And again, it may happen soon, real soon, or we could get a situation where we get a pullback here and then one more surge up. So if you might have to wait a couple weeks for that to play out. Now, another alternative here, all right, is we could get a pullback here, all right, like this, pullback here, and then it could even correct more. So we're not quite out of the woods yet. So we're keeping an eye on this bottom here. This has got to hold for this to happen sooner versus later, getting into the target zone. So we'll see what happens on that. So let's just wait and see week to week and kind of see how strong this move is to the upside. But definitely encouraging. We got a green PTF, which is one of our indicators on the far right-hand side that has a 75% accuracy rate here, indicating more highs coming, which will put it into that target zone. So we'll wait and see what happens with that. But we may see a short-term pullback before that occurs. All right, so and it's the same thing on the S&P 500 and all the markets right now. Here's the S&P 500. NASDAQ's no different as well. All right, so we got a pretty nice move up on the S&P. 5284 is the high there, and it looks like we're already making new highs on the S&P. So that's an indication that the Dow will follow. Okay, so kind of interesting out there, right? A lot of bullishness coming back into the market, and not surprising, of course, to us. We've got more highs now on the NASDAQ, so we're on our way up to the next leg. I'm pretty sure getting into that target zone, which is good, because it makes it a lot easier for forecasting when we can hit the target zone and then that particular box is checked. And then we can start planning for the next move down at some point. But for right now, we are accelerating still to the upside. So keep that in mind. All right, let's take a real quick look at Bitcoin here. And Bitcoin is also rebounding. And this was kind of interesting because the high probability bottom was here. We didn't hit it. We hit the low probability 15% bottom. So that means that 15% of the time only markets correct to that shallow area. 70% they hit the high probability target area. So they did not hit the high probability target area, which is, but we did have an A, we did have a B, we did have a lengthy C. So this may be all we get in this bull market on Bitcoin. And notice we've broken now against a short-term corrective trend line. So that's a good sign. And now we have green across the board here on all the PTFs. So that you can't have it any better. So are we going to go down to the high probability correction zone? Doesn't look like it. All right. We may be done with the correction. Is it possible to go down to the high probability target zone? Anything in the markets is possible. So yes, but one of the things is whether it does that or it recovers now and makes new highs. Both scenarios will eventually result in new highs in Bitcoin. Okay. All right. So that's just the situation because the long-term charts are so bullish still. All right. So this is a very encouraging day that Bitcoin may have recovered. We'll see. It has to get above some of these levels here before I really get super confident of it, but a good sign nonetheless. And we have to get a green owl down here as well. So I imagine if we get above this ledge here, we'll start turning this owl green as well. So maybe we'll get some follow through by the end of the week on that. Okay, so we'll keep an eye on that. And then of course, GBTC is no different, and GBTC basically is our ETF for Bitcoin, and you can see a similar situation is there. What's interesting is you don't have as many green PTFs on GBTC, but as long as you have the green one on the weekly chart on the far right, more highs will eventually come. All right, so there we are now, and of course GBTC will follow Bitcoin for the most part. All right, so that's kind of one of the ones I want to cover. UNG. Now, UNG is the ETF for natural gas. And this is one we generated a buy on our More report on this week. We may have a significant bottom on natural gas. So we'll see. I mean, it's certainly doing all the right things technically for that to be the case. So I'm thinking if you want to try to get in early, good spot to do it, put your stop at the bottom. And I think you can hold this for fairly long term if we're right. If we're wrong, you will get stopped out because that means another bottom needs to be put in. But from a technical standpoint, the probabilities are in our favor for a time to get into the long side. Okay, so UNG is good. USO is one more I want to take a look at here, and this is the ETF for natural gas, and it has been coming down still. All right, so we anticipated it coming down into the high probability target zone. It did it. It's there now. It's not done quite yet, but we'll see. We'll keep an eye on it. We are seeing a reversal in oil today. All right, you can see the bullish price bar here, but one price bar doesn't really mean too much at this point. All right, and that goes for any market. And you got to see some follow through. So we'll see what happens. You still have an active fractal to the downside pyramid here. So when you have a red owl on both the daily and the 60-minute chart. So we kind of want to keep an eye on that. But this pullback in oil was to be expected. It's basically a profit-taking pullback on this move that we've been up almost the entire 2024 year. So it was due for a pullback. The major bottom we're watching on crude here is this bottom on the weekly chart, right around, what, $60 or so. Okay, so as long as we stay above that, we're in good shape. And the exact price on that is a low of 57.83. So we need to stay above roughly 58. Okay, so keep that in mind. All right, and then let's take a look at gold and silver, and we'll wrap it up for today. All right, gold now is is coming back up. We got green PTFs across the board on all 3 time frames. Again, came close to the high probability target, but not quite yet. But it does seem like it's moving. Now, what's interesting here on our analysis is we don't have a red owl yet. We have a very extended green one. We do not technically have a major wave 4 unless that goes red. So this could be a minor 4, and this could be the hook, one more high here. Now, if it doesn't make a high, instead comes down and starts selling off, then this will go red, and then it should correct down into this area. So we'll see. So if it makes another high and this does not turn red, we'll have to redraw the wave 4 corrective zones once that turns and goes red. Okay, so we'll see how that goes. All right, and then silver is our next one. All right, so silver broke out of this pennant a while back. We were watching that. We initiated a buy on that, and it's moving up quite succinctly. I'm looking at it to get above this high here back in 2021. And it seems like it's moving on its way up. I don't see any reason not to take that high out. Now, we may get close to it and have a pullback. We usually see resistance on previous highs like that. So don't be surprised if you don't just go soaring through it. You could, but sometimes we get up to those tops. We hit a little resistance, and then it pulls back and then surges and goes ahead. So that is certainly a possibility there. But we're bullish on silver at this point. So bullish on gold, bullish on silver. Bitcoin certainly could have a bottom. I want to see some more follow through on that. So kind of interesting time. Same thing with the overall markets. So that's kind of where we stand now. And interest rates, I think it's a toss up. I don't really, I think it's too early to tell. I think it's very possible the Fed wants to lower rates a 1/4 point. But of course, it's got to keep its eye on in the inflation numbers as well. It can't kind of backpedal on itself. It is an election year, so that has to be taken into account. And of course, it would be nice in an election year to have stability in the markets. So I think the Fed will do everything it can to do that, including maybe a rate cut to ensure that the markets stay elevated. All right, so that is it for today. I want to thank everybody for coming. We're going to be back next week. I think this week is going to be kind of important because I think what we were looking here is, okay, we've seen some optimism come into the market now. Let's see this week if we have some follow through on that. I think that's key. All right, so have a great week. I'll put a little music on, and we'll go ahead and end the show here, and we'll see you back next time.